Cathie Wood, CEO of ARK Investments, is one of the leaders investors look up to because of her successful track record. Viewers of this channel are no stranger to Tesla, the innovative electric vehicle company, and it's worth mentioning that Wood has been one of Tesla's longtime bulls, with Tesla shares being the majority of her investment company's fund. However, Wood recently sold a bulk of Tesla shares and in turn bought Teladoc shares, a stock she believes will go up 100 times and outperform Tesla. This move has made investors suspect of her belief in the brand outperforming Tesla. Her company currently owns about 10.95% of the brand's shares, and she's been an avid believer in the digital healthcare brand, championing its future prospects. Can Teladoc outperform Tesla? And what is the future of the digital healthcare company? Keep watching to find out. Cathie Wood manages numerous iconic ETF funds with a reputed fortune of about $250 million. Despite the fact that her investments suffered a big loss in 2021, she maintains that the fund is undervalued and due for growth. Cathie Wood has enforced her notion of investing in future-shaping, disruptive growth firms. Furthermore, these businesses must have a 5-year growth forecast that doubles their current worth. Wood is passionate about cryptocurrencies, artificial intelligence, renewable energies, the human genome, robotics, 3D printing, and even space travel. She has been a supporter of everything that is creating the future today. While her investment technique may appear hazardous today, she stated that it's fundamentally similar to that of Warren Buffett, with the exception that he focuses on finding firms that are valued now, whereas she explores companies that will be valued tomorrow. Teladoc is a telehealth, AI, and analytics startup that has become increasingly important in the last year, as social distance and public health guidelines reduce the number of in-person doctor's appointments, as well as other health visits. We strongly believe that moving forward, it will still be relevant regardless of the pandemic being over, as it reduces costs, it's efficient, and extremely convenient. There's no denying that ARK's exchange-traded funds have performed exceptionally well in recent years. The ARK Innovation Exchange-Traded Fund, the company's flagship exchange-traded fund, has returned a whopping 175% in the last year. Over the past year, the ARK Genomic Revolution Exchange-Traded Fund, which invests in equities and the gene-editing healthcare sectors, has returned 186%. We're hard-pressed to dismiss such results. We can all agree that the bullishness of Cathie Wood on Teladoc stock is evident. The telemedicine firm is the largest position in the ARK Genomic Revolution Exchange-Traded Fund. ARK Genomic Revolution Exchange-Traded Fund accounts for 7% of the fund. It's also the ARK Innovation Exchange-Traded Fund's third largest holding, which makes up 6.5% of the fund and is the only one below it. In reality, ARK Invest holds over 11% of all Teladoc shares, which were purchased at prices ranging from $148 to $172 per share. Although the stock was down 75% from its all-time high, the fundamental business has been improving. Some can compare that to Tesla's condition in 2019, after which Tesla reached new highs with an accelerated growth rate. At a cursory glance, the first two letters of Teladoc Health and Tesla may appear to be the only thing they have in common. They are, nevertheless, both market leaders in their respective fields. They're also two equities with a lot of people paying attention to it. Teladoc stock has piqued investors' interest, including ours, because of Cathie Wood's ARK Invest Exchange-Traded Fund. Her company, which focuses on disruptive innovation, has returned more than 500% over the last 5 years, surpassing the S&P 500, which has returned only 92%. As the company has been successful in their choice of growth companies, this should come as no surprise. We believe Teladoc Health was picked because of its innovative business approach, which aligns with Ms. Wood's investment philosophy. We know investors like to keep close tabs and check on the activities of investment managers and billionaires in order to get ideas about where to put their money. So while Warren Buffett is well known among value investors, Cathie Wood may be more tempting to those ready to take a chance. One of her most recent moves was selling her Teladoc shares while increasing her holdings in Teladoc Health, regardless of the fact that the telehealth company's stock has been declining since 2021. But with Amazon looming as a competitor, should investors immediately buy shares in the firm, or is it a risky move? Teladoc's consensus one-year price objective represents a potential gain of more than 50%. On the other hand, Tesla isn't getting a lot of love from Wall Street analysts. The stock's average price objective is somewhat lower than the current share price. According to one analyst's predictions, Tesla's stock price might plummet by nearly 90%. Meanwhile, experts say Teladoc's growth has only just begun. Of course, most analysts are only paying attention to the immediate future. How do Teladoc and Tesla compare when it comes to long-term growth prospects? Teladoc, in our opinion, still wins. Amazon has announced that it will offer a telehealth service to staff across the globe, as well as making it available to businesses, threatening Teladoc's market share. For the sake of getting consumers to test its service, the $1.5 trillion company has the capacity to undercut providers. Amazon isn't the only one who poses a threat. Cigna said earlier this year that it'll buy MD Live, another telemedicine company. The insurer, like pharmacy retailer CVS Health, has seen the growing trend in the area and offers virtual appointments with a physician on its website. Given the industry's size and potential, more competitors are expected to emerge. This means one of two things. On one hand, many competitors keep emerging because they see a viable future in the sector and business model. On the other hand, Teladoc is in the lead and will keep soaring because the competition can't really catch up. According to a survey released last year by Research and Markets, the telehealth market could be worth more than $70 billion by 2026, with a compound annual growth rate of 17.7%. With healthcare services being needed by all regardless of age and socioeconomic class, profits could cut across all population groups. The future of telemedicine is nothing if not bright, with technology that seamlessly integrates data on patients' medical history, real-time health, medical insurance, and financial information to support professional decision-making, improve health status, and save costs. In addition to understanding a patient's lifestyle, doctors will eventually have access to data including current insurance benefits offered depending on a patient's health profile, an expert said. As more data is added to enable for improved decision-making across healthcare, they continued, the amount of things that may be computed becomes unlimited. These technological and data integration breakthroughs, however, will not be without obstacles, but can be sure there will be minimal controversies hampering Teladoc's growth, unlike those that Tesla seems to face at every turn. However, the stock is still not inexpensive and carries some risk. But if you're searching for a top health company to invest in, we think Teladoc is a solid choice. It's the industry leader, and considering how huge and diverse it's become, that's not likely to change anytime soon. So whether you're a hedge fund manager or a retail investor, we agree with Cathie Wood on this one. Teladoc could be a good fit for you. Teladoc might be up against a lot of competition, but investors really haven't seen how well the company could do with Livongo Health over the course of a year, let alone the prospects the two businesses could unearth together. Concerns about Teladoc's acquisition of Livongo Health and its classification as a pandemic stock have driven the price lower since its highs in early 2021. Teladoc's revenue and visitation have continued to rise. The company's forecast has even risen. However, the stock has dropped roughly 50%. Why? Investors were convinced patients would eventually forsake virtual medical sessions and return to their doctor's office. That hasn't happened yet, and all indications are that it won't. On the other hand, NIO, Xpeng Automotive, and Li Auto might cause Tesla more problems in China. It will be difficult for the corporation to fend off competitors. Tesla has lowered its vehicle prices, but that isn't evidence of a strong defensive attack of sorts that is surely coming their way. Even legacy original equipment manufacturers have set aside huge funds specifically to take down Tesla. Teladoc, on the other hand, hasn't been too concerned about competitors such as Amazon so far. The company already has more than 40% of Fortune 500 corporations as customers, as well as more than 50 US health plans. Its platform has more features than any of its competitors. Teladoc appears to be well liked by its users, as evidenced by its Net Promoter Score of above 60. A score above 50 or higher on the NPS scale is considered outstanding. Overall, Teladoc appears to be in a better position than Tesla to defend its territory. With the virtual care leader's more appealing value and great growth potential, we believe the company is currently a great choice for investors and might outperform Tesla in the long run. It seems to be a marathon, as Teladoc expects steady, if slightly slower growth in the following year. Revenue growth of about 25% to 30% is expected, resulting in modified earnings before interest, taxes, depreciation, and amortization increase of 23% to 33%, according to management. Teladoc's growth rate could potentially outpace the industry's. From now until 2024, the company's goal compound annual growth rate is between 25% and 30%. According to Teladoc, the entire addressable market in the United States is worth more than $261 billion. The organization can boost revenue by attracting new members and enrolling them in a growing number of programs. All of this suggests that there will be plenty of potential for expansion in the future. Do you share Cathie Wood's belief in Teladoc? Do you believe Teladoc stocks will outperform Tesla stocks? Leave us a comment. We'd like to know your thoughts.